around 63% of the agri business or chain is reliant on this sector.
The good thing is that Uganda's tax regime, more specifically income tax regime, also has kind of a very simplified tax regime, which is called presumptive taxation.
So where do we get the challenges? One, and most fundamentally, the feeling that they are bearing the biggest of the tax burden.
The first gap is that we are not able to see businesses track their sales. Because at the end of 12 months, you should be able to know how much you have made in your sales.
Cost of non-compliance is very high. It takes years and years to build a capital. But at the same time, when you are building your capital and business, please be mindful that you are also doing compliances right.
And as usually we are not seated, we have actually engaged the different stakeholders to be able to define all these sectors to the list that we can find it. And that work is in progress. As I speak, we are already underway looking at the nitty-gritties to ensure that we do not catch the small fish with the big tilapias.
Good afternoon, ladies and gentlemen. Welcome to episode 13 of the Tax Hub podcast. My name is Fatuma Ramadan Nabulia. I'm a tax associate at H&G Advocates, and I'm extremely privileged to be your host for today's episode. The Tax Hub podcast is an avenue where tax practitioners, tax experts, tax lawyers, the general public, the Uganda Revenue Authority meet to discuss everything tax, from emerging issues to current affairs to areas needing improvement. Tax Hub is where it is at. Today's episode is sector-based, and we are going to be discussing the wholesale, retail, and trade sector. This sector, as of last year, contributed to 15% of Uganda's GDP and employs majority of Uganda's growing middle-class population as well as the young people. There has been a lot of talk and a lot of emerging issues within this sector, both from the tax practitioners and taxman's perspective, but also from the taxpayer's perspective. We, as the Tax Hub podcast, deemed it important to bring forward a group of esteemed panelists, both from the Uganda Revenue Authority, the tax practice space, as well as the traders, to discuss the emerging issues, areas requiring improvement, the thorny areas, as well as those areas where the taxman and the taxpayer agree. So to my immediate right is Mr. Ankit Jangla. Ankit, you're most welcome.
Thank you. Thank you, Fatuma.
Yes, so for the benefit of our viewers, the lay person that is seeing you for the first time, who is Mr. Jangla?
So once again, good afternoon, good evening to everyone. Thank you, Fatuma. Let me begin with thanking Tax Hub team. The topic which has been selected is a very practical topic, and it is something which impacts the business community day in and day out. It is our pleasure to be part of this discussion, deliberation, and add some light to the audience who are watching us. So my name is Ankit Jangla. I work as a director in tax team of Grant Thornton, Uganda. As an experience, I have 10 years of experience in the taxation field. Academically, I am a qualified CPA. At Grant Thornton, we are a team of more than 150 people serving 350 dynamic clients. And we look forward to have a very informative session over here. Thank you, Fatuma.
Thank you very much, Ankit, for honoring our invite.
Thank you.
Our next panelist is Mr. Becca Bahasha. Becca, we are glad to have you here.
Thank you, Fatuma, and thank you, Taxi Hub, for inviting me to represent the traders in this country and in this region. I am privileged to be working with Casita Uganda, which is, I would want to be selfish and say the most outstanding business or traders association in this country and probably in the region of the East African community. Yeah, and at Casita Uganda, I'm also happy that I work as the research, policy and advocacy officer. And in that docket, a collection of those three elements is, if not one of the most crucial. You're handling matters to do with the research, collecting evidences. Then you're going to go out there and advocate, but also leaning on policies, because this is the playing field that traders have been at least yearning for. So it's always a pleasure for us as Casita Uganda to work in tandem with other like-minded people. And in this case, we feel like this is supposed to be our animal to skin. And so if we have people who are coming to assist us to skin it, the likes of Tax Hub, the friends in the Grand Thornton, and of course our comrades, the taxman. Earlier on, as you're introducing, you said how the tax, the URA, for example, in this case, the taxman, comes to the same table with those who pay the tax. It's for some people, they would think it's the element of oil and water in the same glass. Yeah, we may have some points of chanting out, but we're always friends and comrades, and we're in this together. I'm happy to be here.
Thank you very much. Like Mr. Bahasha has noted, the Tax Hub is a space where would-be opposing parties meet to discuss and deliberate on the thorny and not so thorny issues. So we've already heard from two of our formidable panelists, but any discussion regarding tax, any such discussion that would be missing the Uganda Revenue Authority would not be full, and one could even argue that it wouldn't be fair. So for purposes of fairness, we have Mr. Julius Nandeva. Mr. Julius, thank you very much for joining us today.
Thank you.
For our viewers, please, who is Mr. Nandeva?
Thank you so much, our moderator. It is always a pleasure to join these discussions. Where I come from as a URA representative, this is a platform where we actually have an opportunity to educate our taxpayers, but also discuss the most important issues. My name is Julius Nandeva, and I am a manager in the Domestic Taxes Department. I have been in the authority for the last 15 years. I have had an opportunity to interact with both the small, the medium, and the largest taxpayers. As I speak now, I sit in the large taxpayers office. But my experience of 15 years, I have been able to interact and even educate in different spaces so many taxpayers. So every opportunity that we get as URA to educate taxpayers is a golden opportunity. And we want to thank the Tax Hub for having partnered with us. And now that you're bringing the traders on board, it is a plus. When we have the consultants on board, it is a plus. And for us, we believe that if all these parties come on board, we'll be speaking the same language, but to the benefit of the last person called the taxpayer. And I want to encourage that these discussions continue until we teach Ugandans about tax and until everyone in Uganda embraces tax, because we are all looking for one elephant, and that elephant is collection of tax for national development. Thank you.
Thank you very much, Julius. And I'd like to confirm that for as long as the Tax Hub is in existence, such discussions will always happen.
We appreciate.
So, as we have introduced, today's topic is going to be centered around the wholesale, retail, and trade sector. And there'd be no better person to kick us off than a spokesperson of the traders themselves. So, Mr. Wahasha, we've had introductions, we've had some statistics here and there, how much the sector contributes to Uganda's GDP, how many people it employs. Could you please, you as the person on ground, explain to us and expand our understanding of how critical this sector is to Uganda's economy?
I like the way you kind of blended it at the end. How critical.
Yes.
Yeah, indeed, it's very critical that reflections on this sector come to the light. Because if we didn't do that, then we would probably miss out the point. You rightly quoted that about 15% of the GDP comes from this sector. But allow me also to throw some more statistics around the sector. Around 63% of the agri business or chain is reliant on this sector, wholesale, retail, and trade. Reason being, around the same percentage of people in Uganda eat from their pockets. Meaning, if it weren't for the existence of that sector or subsector, people would not be eating. Not so many Ugandans are farmers. We have very many farmers, but majority, to that extent, do eat from their pockets, meaning they are reliant on the wholesalers and the retailers in designated markets, on streets and everywhere, Then again, running into maybe other spaces, you would want to appreciate that retail and trade are very integral with all these value systems. So by that kind of reflection, we could not appreciate this sector much more than this. And those of us who play in there, the primary players in that sector, do really understand to what extent we are significant in people's lives. Definitely, we are there for monies. We are not charity. But we know that a good percentage or a significant number of Ugandans, for this case, are reliant on that sector. And having highlighted that, I would want to emphasize that I think is timely. If it hasn't been much of that extent, it would be timely that government, in this case, I want to be particular, that government looks at this sector with the interest, much more interest than it has done before. The reason I say so is it's not all rosy in that sector. Maybe at some point I will also highlight more on that, but it's not so rosy. In fact, it's a situation that is hard to deal with, but I mean we must go on. But to stand fair, maybe to government, something has been done or something is being done. And probably that's why it is also seemingly thriving, or at least by trajectory. There has been good increase and significant increase in participation, active participation in wholesale, in retail and trade. But there is still need for more improvement, and probably especially when it comes to the general environment that that sector operates in. Because at the end of the day, we surely need that more than sometimes the handouts that have been characteristic of some programs. But we feel on a larger context, I think it would be better to have emphasis on the general environment that the wholesalers, the retailers, and the traders at whatever level do operate in.
Thank you very much, Mr. Wahasha, for that practical introduction of what the sector is like. Now moving to a more technical perspective, I'd like to come to you, Ankit. for the layperson out there, for the general trader, or someone thinking about, trying out their luck in the wholesale and trade sectors, could you please break down for them the specific taxes that are applicable to this sector?
So, like every other country, Uganda also has a taxation structure, because we all accept that without taxes, the country cannot run. And so does our country, Uganda, cannot run without taxes. So the structure of taxation in Uganda, which is also applicable to these wholesalers or to the retail traders, is one, income tax. So what is income tax? So income tax is nothing but any tax which you pay after you have made sales and accounted for all your expenses to make that sales. Be it electricity, be it shop rent, be it staff salary, etc., be it warehousing costs, whatever remains after accounting for these costs. If there is any profit, on that profit, you are expected to pay tax to the government. Now, the good thing is that Uganda's tax regime, more specifically income tax regime, also has kind of a very simplified tax regime, which is called presumptive taxation. So under that regime, you don't need to do this hassle of maintaining books of accounts, maintaining records. If you are a business where the turnover is below 150 million Uganda shillings, and you are in the specific businesses as laid down in the law, it could be food business, it could be saloon business, then for every year, you are just expected to pay some lump sum tax. You pay that tax, file the return, end of the day. Your income tax obligations are catered for. So that's income tax on a high level. Now, a very other important tax which comes into the picture for this sector is VAT, value added tax. Now, whenever you make a sale for any given particular commodity or a service, the businessman is expected to levy 18% VAT on it. Obviously, law is very sensitive and it has catered for situations wherein not all sales attract VAT. So there have been a category of sales and services which go for exemptions or zero rated. But largely VAT is applicable on majority of the goods sold. So let's say a mobile phone. You go to a shop, you place an order for a mobile phone, the shopkeeper sells. If his turnover is above 150 million Uganda shillings, he is expected to charge VAT on the price of a phone, and me or you or us as a customer, we are expected to pay him that VAT. And in effect, he collects that VAT and remits it back to Uganda Revenue Authority. That is government. So that is VAT. Then there is withholding tax. Now, we are all familiar, we would have heard, say there is a small dealer or a trader who makes a sales sometimes to a big company or a medium-sized company. And that company, when that dealer makes a sales, that company, before paying him, will deduct 6% and pay it to him. And that trader or a dealer may get surprised that why am I, for what the hell, my 6% is getting deducted. So that 6% is nothing. Your buyer has just deducted that 6%. It's your advance tax, your advance income tax, which he has paid to Uganda Revenue Authority. And when this trader who is going to make the declarations at the end of the year and say has an income tax of 100 to pay, he can claim this withholding credits and pay only balance to URA. So that's withholding tax. Another important tax which has come up or which is applicable is excise duty. There are selected commodities or services which go for excise duty, but excise duty largely is applicable to importers and manufacturers. But obviously there is a list of commodities which go for excise duty, and there is not one precise rate for excise duty, unlike VAT. Then there is something called digital tax stamps. It is not a tax, but like spirits, mineral water. This kind of commodities, when you deal in, it is expected that these commodities must have this DTS, digital tax stamps, affixed on them. Otherwise, they are liable for confiscation and penalties. So what is happening is the URA has a digital system to track sales, quantitative and qualitative sales of these products, and therefore these stamps have been made applicable. So anybody in non-compliance of these digital tax stamps has a hefty penalties to face. And lastly, again, I want to bring out one more final thing. EFRIS, electronic invoicing, which has been introduced. Fatuma, you will pardon me for jumping.
Please go ahead.
But again, I want to make it clear. I am not speaking for URA or on behalf of anyone, but against the common understanding or common myth, EFRIS is not a tax. EFRIS is merely an electronic invoice which was introduced in 2021 to replace the manual invoicing system, to help in better accountability, to tap in the leakages in the revenue system, and to help in maximization of revenue. So it's an electronic invoice, and every VAT registered person is expected to raise EFRIS invoice. There can be some instances where URA has a powers, and using that powers, they have expanded that list, wherein through which they have said that, okay, this particular industry, you are in the fuel business, yet you are exempt, but no, you are supposed to make EFRIS. So by and large, this is the tax landscape of Uganda. Then there are stamp duties there, and there is pay as you earn for somebody earning a salary, and where you fall in that particular threshold, you pay tax. So all those kind of taxes are there, but I will not go and elaborate them because it may not be in interest of this forum. So more or less, this is the tax landscape of Uganda. Thank you.
Thank you very much, Ankit, for that practical breakdown of the taxes that are by and large levied against the sector. So I'd like us to now hear from the URA's representative for today's episode. We have had a practical description of what this sector is like, what the traders go through every day, what they would perhaps love the government to do for them. We have also heard from Mr. Ankit on the taxes that are due and the taxes that a trader may encounter during their day-to-day operations. Now, we'd like to hear from you. What compliance gaps does URA notice in its day-to-day follow-up and run-ins with taxpayers in this sector?
Okay, thank you so much. I want to thank the previous speaker, Mr. Nkit. Sometimes when we are talking about these matters from URA, taxpayers think that URA create these taxes. And I want to put it clear that all these taxes that he was talking about are creatures of the law. They come from the law. And this law is placed in the hands of our members of parliament. They debate it, pass it, and it becomes the law that must be implemented within the land. Usually when they are passing these laws, they are looking at so many objectives. One of them basically is the collection of government revenue, because like he said, we can't run a country without revenue. But also other taxes are for regulating how businesses work. Now, I want to agree with them, with my friend from Kasita and Mr. Nkit, that the wholesale sector is one of the main sectors of this economy. Why? Because it actually links between the bigger players and the last consumer. I want you to imagine all the things that are imported, all the things that are manufactured in this country end up in the hands of the wholesalers who trickle them down to the retailers until they meet your mother, my relative, and they use them as household items. But all these items also traded by wholesalers and retailers are actually inputs to other businesses. If you talk about a consultancy firm, for example, you will not work without stationery. But who is going to supply this stationery? Someone at NASA. If you talk about any other business, you realize that there is a whole chain that moves up and down. So the wholesalers depend on manufacturers and importers, but also the manufacturers depend on the wholesalers and retailers. And because they bring that link, we must pay attention. And I want to give comfort to my brother from Kasita that the wholesale and retail sector are one of our top priorities. Why? Because you already talked about it in terms of its contribution to tax GDP. And the moment any trade, any sector is essential to the tax to GDP, it simply means as tax authority, we cannot close an eye on it. We must support it. So you ask then, what are the areas that we actually see as gaps in the wholesale and retail business? Number one that we want to recognize is that these businesses are willing to pay taxes. There's no doubt about that. Where the problem is how these businesses are run and how they are documented. And this is where we have to have the central discussion if we are going to help this sector be able to grow to the next level. Now, I will start with the first gap. He talked about income tax. How do you compute income tax in the best way possible? Get your income, remove the expenses. When you remain with a profit, you pay a tax called income tax. If you're a company, we are only looking at 30% of the profit, residue profit. Meaning if you have not made a profit, you're not going to pay tax. So where is the first gap? The first gap is that we are not able to see businesses track their sales. Because at the end of 12 months, you should be able to know how much you have made in your sales. You should be able to tell how much you have incurred in expenses. And therefore, as the business owner, you should be able to know that I have made a profit or I've made a loss. And I am very sure every person would be happy if you make a profit to also contribute something to government, knowing that that revenue is also helping you. So what did we see? And I want you to see what practically happens in the business that we go to. Number one, we know that you cannot track your sales unless you are documenting it. How would we document it, for example? He talked about EFRIS. The reason why we brought EFRIS was because we wanted to support our traders to be able to track their sales and be able to track their expenses so that they can be able to tell how much they have made in profit or loss. And that would bring fairness. Number two that we have seen is that even those who have embraced EFRIS, they actually do not do it 100%. You find when you come and you want to buy something, they ask you, do you want EFRIS? If you want EFRIS, the price is different. If you don't want EFRIS, the price is also different. It simply means that you're actually selectively invoicing. You'll not have a bigger picture of what your sales are, and therefore you determining your profit will also be very hard. Number three, it is hard for businesses not to mix their private expenses. So every time we are actually auditing these wholesalers, you find the owner of the wholesale business is mixing their private money, their private costs with the business costs. So when you want to break them to understand how the business has participated, it's very hard for you to actually distinguish between what is private and what is for business. And yet the law is requiring that we can only allow expenses that are for business purposes. We can only consider income that is only coming from business. I'll give you an example. A trader goes and sells off their assets, brings money into the business, but they have not recognized that they have actually brought in money in business. And then that money is mixed with all other monies. When it comes to registration of taxes, he talked about VAT. We have so many wholesalers in this country and retailers of big magnitude who are able to make more than 150 million in sales in a year, but they are not registered for VAT. What does that mean? That the VAT chain is broken. Whereas we should be able to look at it from where you actually, for example, from manufacturer to the wholesaler to the retailer, and then the last person called the consumer, you and me, are the ones suffering the tax. When you break that chain, it's very hard for you to actually manage the VAT. So we are emphasizing, for example, if everyone can be on EFRIS, it means we'll be able to track your sales, we'll be able to track your expenses, because your expenses give you what we call input tax, your sales give you what we call output tax, and VAT becomes simplified because when you get your output minus input, if you have something to pay to URA, you pay that small difference. If your input is more than output, URA is willing to actually give you a refund. And you realize that because we are embracing EFRIS, every importer, when you import, that record is on your tin. When you go to the manufacturer and buy, that record is also on your tin. So what is going to happen is that we are going to see taxpayers having more input without sales because they are not selling on EFRIS. And that definitely will bring questions on where did you take these goods that you actually purchased, which we actually don't see in your shop, yet you have actually not declared that you sold them. That's why, again, like we come back to the trader and say, if you know that you're purchasing on EFRIS, you must also be able to sell on EFRIS. And as usually what we have started doing is sensitize everyone to ensure that they embrace the system so that it helps them document whatever they do. When it comes to tax registration, even tax computation, I am happy that we now have consultants seated on the same table. Ladies and gentlemen, let's agree that you cannot be a master of the business, but also be a master of tax. That's why there is a separation of responsibilities. That if I know how to do my business, I should be able to get a tax consultant to help me manage my tax affairs, because I cannot do business without managing my tax affairs. What we have observed is that a taxpayer is able to make money for 5 years and they have not been compliant with taxes. When URA comes and audits them and they have given them a big liability, they actually say now URA is the one killing my business. But I want to tell you that it is not in the interest of URA to kill any business. And I want my friend from Kasita to take this message to the traders that URA is only happy when businesses are flourishing. Why? Because the more profit you make, the more taxes we will get. When we are celebrating that the wholesale and retail sector accounts for the biggest part of the GDP, we should also be celebrating that this sector is also contributing the biggest part of GDP. You realize that our tax GDP is very small, now ranging between 13 to 14, yet we are already saying the wholesale alone is 15% of the GDP. Now, what if we collected also 15%, for example, at minimum, from the wholesale sector? Then we'll be growing as one country. Definitely, there are so many other issues that come up as we do the auditing, but those are the main ones. And like I said, these traders are willing to pay the tax. They are willing to actually comply, but we still have a problem of documentation and the way these businesses are managed without engaging the other practitioners in the picture.
Thank you very much, Julius, for that insightful perspective from your side. Now, Becca, we've heard from the Uganda Revenue Authority regarding the traders, the loopholes that are in the traders' tax compliances. Now, from your perspective as a representative of the traders on this platform today, could you please break down for us the tax compliance challenges that our day-to-day traders face as they seek to comply with the laws that, as Julius has stated, have been passed by their members of parliament?
Thank you. And I also thank my comrades here on this panel for the very wonderful, significant, very meaningful submissions. I do not deviate from what you submitted. And maybe allow me first to reiterate and reaffirm that traders are willing to pay taxes in this country. In Kasita, I heard the research docket, and I'm speaking from evidence-based findings and interactions that I've had. Traders and players in this industry or sector are willing to pay taxes. So where do we get the challenges? One, and most fundamentally, the feeling that they are bearing the biggest of the tax burden. So that feeling, aside of the willingness to pay, the feeling is there and it's documented, unlike the records of business. At least the feeling is documented. The feeling, and how is it documented? An elementary, let me go for the elementary trader or basic trader would want to compute. Let me go for slightly the lowest, 10 million. Let's look at 10 million. Someone who is using a capital of 10 million. This person's taxes that they are going to pay, if you really compounded them, including the income tax, the VAT, 18%, withholding 6%, and all the others, you may end up into 80%. Now, where is the justification for staying in the business? If you're running with a capital you've maybe, let's say, imported or you've stocked to the tune of 10 millions, and you have to bear the burden of 8 millions, meaning you have 2 millions. If you are honest with yourself, that 2 million left for you may not be even equivalent to what you're putting in. So the willingness to pay taxes is there, but the burden is bigger, especially on the lower docket, the lower players. Let's face it. And I would even look in the eyes of, say, the Speaker, Minister of Finance, and say this: the tail end players are overburdened than the higher. either out of policy or out of procedures. In this country, you know very well, or you've heard, or you've read, it's easier for you to qualify for tax exemptions or tax holidays when you're at the higher end than when you're at the lower end. One, for reasons of what qualifies you to achieve that. I think whoever thought out this at that time did not factor in the lower end player. So there is a mismatch there. Two, for the fact is that I think it's about connection. No. Maybe let me look for the right word. Not necessarily connection, but although it also plays, but the most important thing is exposure. Yeah, most of our traders, the wholesalers and the retail players are not well exposed to these offers, these incentives. So they do not know, let alone not knowing how to qualify for them. So for those reasons, one being to the take of the traders, the wholesalers, and those players, and the other being to the side of government and the regulators. So what can we do? I think we need to put hands together, look at this, harness and harmonize, then we can address this because it's coming from two-way. Then we also know and understand, especially from where we sit, being the Traders Association, that most of the traders somewhat not comfortable with the way tax procedures run in this country. Yeah, for one reason, maybe I'll give just an example. Every time you formalize, you know that over about 52% of this economy is informal, although there are varying statistics, but it's informal. For reasons being, people would have wanted to formalize, but every time you formalize, you seem like you're inviting all the trouble to you. Then, aside of that, that factors in another kind of big animal to fight with. It's like formalizing is also criminalized. Sorry for the narrative, but I think when you formalize, you seem like you've committed a crime and you're going to have issues. If you fail to comply, our comrades at URA, comrades everywhere, they will not want to look at you like probably there is something that came short of your effort to comply. They will instead look at you like a criminal, not wanting to understand why it failed, but looking at the end, you being failing too. Yet there are so many other things that are required in there, even the most basic, including tax education. You reflected when we were starting, you reflected on the EFRIS. When EFRIS came, it felt like, I think it was taking away the lives of traders. You remember, if anyone remembers how we reacted as traders, majority of our friends, save for some of us who had the chance to look at the number of blackboards, we knew, honestly, that this wasn't a tax, but rather a modus or a mod or a channel. But, there's a factor, a very big playing factor of, sorry for the word if it feels otherwise, ignorance. And yet we know every year, annually, URA has a budget for tax education, and many other stakeholders do. They have the obligation, let alone the monetary budget, but we have the obligation. So, in my opinion, I think we need to be more intentional and look out for the best ways of us to effectively do tax education. And the more we let the traders and all the business people in that very chain understand these things, the better it will be for them to comply. I want to add this, and probably for now also stop it at that. Many of the traders or people that I know in the business circles, they would want to comply. Yeah, but they just lack the basic understanding. Regardless that we have the experts like my friend there, sometimes they're also not affordable to a number of us. Yeah, so we want to embrace them or use them, but sometimes we are not able to afford them. On the other side, we also have some bit of mistrust. I'm saying we because I'm representing traders here.
Yes.
Yeah, sometimes we have some kind of mistrust that they don't understand us because a majority of them are from the elite class. Yet majority of us or majority of the traders in Uganda are literally those who are from the low end. So there is a bit of feeling and a justifiable mismatch between how we understand things and how we scope in. So if we only took up that kind of appreciation, maybe we can achieve better compliance, a number of those factors that are violated, and probably more that I may have missed. Yeah, so for now, allow me get back to you, Fatuma.
Thank you very much, Becca, for that vivid description of the challenges that are faced by our day-to-day traders, some of whom could be viewing us right now.
Yeah.
So it is only fair that I now give the opportunity to the Uganda Revenue Authority to please tell us, after hearing the different challenges, some are real, some are perceived, some are due to a lack of information. There are quite a number of subsets of challenges that are being faced by the sector. What are you doing as URA? What initiatives are you taking to support these traders, right from the top wholesaler to our medium and small retail trader out there? Yes, please.
Thank you so much, Madam Moderator and my co-panelist. It is an opportunity to hear it from the horse's mouth. And I'm glad that we are having this discussion. Because when I was actually listening to his challenges and the team, you would realize that we have a very big mantle with the leadership of the traders to go down on ground and be able to educate these taxpayers. You realize these taxpayers have mastered their business and they are making this money. And because they are making the money, their first objective is to maximize their profit. But in so doing, we also observe that we must operate businesses in accordance with the law. And therefore, our role and what we are doing as URA is to ensure that we intensify tax education. I am indeed happy that even the Tax Hub now has joined us in the struggle. I am happy that we have the consultants in the struggle. I am happy that Kasita can sit with URA and we are discussing these matters. That means we are all willing. That means that we are all willing to actually solve the puzzle. Ladies and gentlemen, and especially the traders out there listening to us, is that URA is not here to kill your businesses. And like I said, there is no shareholder who wants to kill his own company. Now, if you did not know, URA is a shareholder, a silent shareholder in your business. Why? Because every time you make a profit, URA is happy. So what would URA want? Of course, ensure that you make more profit. So what are we doing? You realize that the tax administration has a trade, and I will simplify it. When you start business, the expectation is that you're going to get a tax identification number. We call it a TIN number. We have eased that process. I remember whenever you would want to get a tin, you would even spend a week without a tin. Today, you only need your phone and your national ID. If you're an individual, you would actually have a tin. That is a starting point. If you want to register your business, today, if you went to URSB, because we have a major stakeholder in business formalization called URSB, you would get registered in a day. What is that helping the taxpayer? Is that then we are able to formalize you so that then we can know that you exist and then target you in terms of educating you and supporting you to do the right thing. Now, you realize that when you have a TIN, the next obligation is to be able to tell URA how you are trading. And that we call it filing a return. Whenever we talk about filing a return, to the trader down there, they may not appreciate it. But filing a return, we are saying URA does not want to disturb you in your operations. You are the master of your business. You understand your business better. And URA has trusted you with all its heart that you're going to actually tell URA how you have made your business, whether you made a profit or loss. Now, I want to come back to the taxes that my friend from Casita was talking about. Whereas in number, you might actually think there are very many taxes. But in substance, when you break them down, you realize that the biggest tax of a trader is income tax. And we always said income tax is paid when you have made a profit. Our role and the role of the leadership of Casita is then to sensitize people on how they can be able to determine their profit. Get the books out of the way. I am very sure that every trader is capable of telling whether they are making a profit or a loss in their business. So the issue is, how do we make that we know get documented? And that's why we come in to support. When it comes to the other taxes, for example, VAT. VAT is not tax for the business. And that's why we want to support the traders to appreciate that that tax called VAT is not a business tax. How does it work? Because VAT is a result of comparing two things: output VAT and input VAT. Where do we get output VAT? We said as long as you're able to make 150 million and above, you're required first of all to register for VAT. Why do we want you to register for VAT? Because we want you to benefit from that VAT chain. You as a business, you're not supposed to pay VAT. But what we need is that when you buy anything and they have charged you VAT, you have an opportunity to claim it, because the law requires or allows you to claim that they have charged you because you're in business. But also the law requires that because you're going to pass on this good or service to the next person, also charge that consumer some small tax, which you're going to give to URA. Now, instead of bringing tax to URA and you also come back for the tax that they charged you, we said balance your books between what they charged you and what you've charged your consumer. And if you have anything to pay, pay it. If they charged you more, can we actually process the refund? I happen to be a manager also overlooking the refund process. And I am always happy to process refunds for taxpayers who have actually kept the right records. All the taxpayer needs is to actually show that these are my sales, these are my purchases, or this is my input, and my input was more than the output. And the only genuine documentation you need today is EFRIS. So EFRIS is here to say, look here, if all your sales went through EFRIS, if all your purchases went through EFRIS, then you already has evidence that you paid more tax than you have actually sold, and therefore you should be able to get your refund. Get taxes like pay as you earn. Pay as you earn is tax for the employees. All we are saying is, get an employee, agree with this employee that I am going to pay you 1 million. But when it comes to paying this employee, don't pay him all the 1 million. because part of it is tax that must be paid by that employee to government. So your role as the employer is to get that 1 million, remove the small tax that must go to URA, and then the balance, pay it to the employee. He talked about withholding tax. Withholding tax, every time they withhold from you, they're only saying government is picking some little tax in advance so that when you file your return later, you claim that tax. Now, what would be the tax? Income tax. What is it based on? On the profit. If you have made a profit, pay tax. If you have not made the profit, don't pay the tax. So if you boiled it down, you'd realize that a smart trader would end up not paying a big tax. They would only pay a small tax where they are happy that they are paying it from profit. We do not want to tax you and tax your capital. Because when we tax your capital, we have affected the economy. We want the economy to grow. And we cannot tax the capital when we want the economy to grow. So what are we doing, for example? We are, for example, helping taxpayers to simplify the way they file these returns. In olden days, you would actually have to download so many sheets, for example, to file a VAT return. Today, as long as you're in EFRIS, you'll find that return filed for you. All you have to do is click and the return is filed. Look at the local excise duty. Look at the rental tax returns. All those have been simplified in a way that even the small trader can actually use them. We now have also what we call presumptive tax. Presumptive tax was meant or is meant to cure the concerns of the small taxpayer. That taxpayer who does not make 150 million in a year should not be burdened into the language of filing a return. You only have to register payment as long as you're able to tell, which I am very confident every trader knows how much sales they have made. Now, all we need is you getting, even if it is a counter book, where you're recording your sales every day. And the reason why we want you to record those sales is that then when we come to tax you, or when you're taxing yourself, you are fair to yourself because you're based on the realities on the ground. We are also trying to build a lot of channels. Today, even if you woke up at midnight and called URA, they would receive you. Today, even if you're in business and got a challenge, you would call immediately because we have a 24-hour service line, toll free. You wake up, call URA, and they will be able to support you. Now, I want businesses to separate themselves because when I am managing my small shop, it is not as complicated as when I am managing a big wholesale business. When I am still small, I can manage my affairs, probably with my children guiding me here and there. But when I become big, I must seek for advice. And that's why I am seated here with a consultant from Grant Thornton. We have had consultants sit here. And the reason is we want to tell the traders, these consultants are here to support you. They are not here to fight you. They are here to link you between you and URA. They are here to advise you to ensure that you're not doing the wrong thing, because everything that you do and is wrong is going to impact on your business. Now, let's come back to the burden that is pressed on Ugandans. I had my friend from Kasita talk about exemptions. I am also meant to be aware that some traders and wholesalers and Ugandans don't know that these exemptions that are available to foreign traders are also available to Ugandans. There is no provision in the law where we are favoring non-Ugandans and we don't have the same favor to Ugandans. Again, he mentioned about exposure. This is where we have to participate as Ugandans. Remember, URA is just an agent for all of us. I sit in URA not because I am just an authority. No, I am here to represent all of us, including the traders. Because when they make this road, who drives on this road? When they make this hospital, who goes to this hospital? Definitely all of us go to this hospital. Now, when we start seeing ourselves as a chain, when we start seeing ourselves as partners in developing this country, we start asking ourselves, what can we do together to improve what we do? So the message that I want you to take out there, and those who are listening to us and viewing us, is that URA is ready to work with every trader. And in fact, when you're able to actually come to URA, you will understand that managing your business is much easier than when you actually hide yourself. Because I keep telling my friends in the business that compliance is much cheaper than non-compliance. Once I understand what to do and I do it, I'll find that I have a less tax burden than when I actually don't do it. And what are we doing? We are ensuring that we're exposing you to all avenues of support. If you don't want to come to URA, at least go to Grant Thornton. If you don't want to go to Grant Thornton, at least look at those small other tax advisors that are around you. But make sure you do not operate a business without a tax advisor, given that your business has an implication on the law that we implement. And as URA, definitely we have a mandate to collect taxes, and we must collect it from those who are making the income. Over to you.
Thank you very much. So during your discussion, you hinted on the concept of EFRIS. And I remember EFRIS was a hot topic last year. There's a lot of exchange between the taxpayers, the representatives, the government, URA. So, and late last year, we also saw expansion of the scope of EFRIS to 12 additional sectors. Could you please speak to that? Explain to us what that means and the implications of that expansion of the application of EFRIS to the layperson, the trader, and the tax practitioner probably watching us right now.
Okay, thank you so much. One of the best things that has ever happened to Uganda is EFRIS. And those who have actually tried it appreciate what we are talking about. I'll give you living examples. In olden days, someone would go to NASA and process all sorts of documentation to indicate that someone charged them tax, and they would come and claim that tax in URA. Even the person who had not charged them would not know that someone is using their name to actually claim or defraud government. We would also find issues. Whenever we would go to the taxpayer, we would find no documentation at all, because the taxpayer's focus is not keeping documents for URA, but ensuring that they can make a sale today, and that is it. So if they made a sale today and they have not kept any documentation, number one, they would not even be able to track what they have sold. So if they are not present themselves, any of the shopkeepers, for example, would actually sell things, and they will pocket the money, and they will probably fake documents, and they will never know. That time, processing a refund for taxpayers was very hard. So we sat down and said, how do we help the taxpayers be compliant with the minimum cost? If we want them to have proper documentation, why don't we then support them with a system that is going to actually give them that documentation, so that they can be able to trace their transaction with ease, that they can be able to support their transactions with ease? So we introduced EFRIS. EFRIS, in simple terms, is an invoicing system that instead of using the manual system, instead of using the manual documents, use now a system. And how does that system help? That whenever you issue an invoice, you retain a copy, the buyer gets a copy, and URA gets a copy in real time. What does that mean? That all the three players now have evidence of the same transaction. If you have made a sale, URA is not going to come and say, on this sale you made VAT over 100 million when you only made 10, because there is evidence, and you can even go back to the buyer and say, no, for us we actually bought goods and the VAT was only 10 million. So there is evidence that is supported by 3 people. Number 2, that document is permanent, because we no longer have to ask you to bring files of documents for you to actually confirm that you made a transaction. We already have that transaction. Now, when we implemented EFRIS, we are only focusing on persons who were registered for VAT. And our assumption was that people who were making 150 million in sales in a year would come and register for VAT. And therefore, they would know how to file their returns, they would know how to go through these records. Then we discovered that indeed there are so many Ugandans out there who are in business and they actually make much more than 150 million, but they are not registered for VAT. And I'm very sure my friend from Kasita would attest to that, because all Ugandans, this is common knowledge, that we have so many businesses that are actually bigger than those that we have on the VAT register, but are not registered for VAT. So what would happen? That these guys are the suppliers of the guys that are registered for VAT. So because they are suppliers of the guys that are registered for VAT, the traders who are registered for VAT definitely will sell with VAT, meaning they have output VAT. The guys who are actually not registered for VAT, by the way, go ahead and charge tax, because in their price, there is an element of tax. But because it is not identified, it goes without the VAT component. So the taxpayer, the other taxpayer, has actually incurred a bigger cost, thinking that they will actually claim that input tax, but they don't have an opportunity to claim it because the person who actually sold to them is not registered for VAT. When it comes to income tax, for us to be able to implement the VAT and bring fairness, we said if you are registered for VAT and you have dealt with someone who is registered for VAT and they have not given you an invoice, you cannot claim that expense because we cannot confirm that it is authentic. So the guys came here and said, you are missing the point. The guys who are making the money are not yet in the bracket. Why don't you bring everyone into the bracket? Because when you bring everyone into the bracket, then you have leveled the ground. We are able to see who are the guys that are making the money. Who are the guys that are saying we don't qualify for VAT registration, but they are the importers? Who are the guys that are saying we don't qualify for VAT registration, but they are the biggest consumers, they are the biggest clients with the manufacturers? So we decided that because the wholesale and the retail and the other businesses have inputs that the guys who are registered for VAT use, they must also be compared to be part of the EFRIS equation. Because when you're part of the EFRIS equation, then we are able to see your transactions. We are able to see sales that you have made. We are able to see the purchases you have made. And in that regard, we'll be able to identify the small, the medium, and the big taxpayers. But also it helps those who are compliant. Because if I am compliant, but the guys I'm dealing with are not compliant, you're going to deny my expenses, which I ordinarily incurred. Yet, you're only asking, I need support of EFRIS. So what we did, we expanded the scope to the different sectors. And when we expanded, of course, we've had concerns that you've expanded this scope, but you've not been able to define the scope to the last person. And those concerns are legitimate. Is URA seated? No. What we are trying to do is that then we understudy those sectors, because you first set out, you roll out a system, and then you understudy how it is moving, because it started on 1st of July 2025. We are now finishing 1 year. After 1 year, we run the numbers and see what are the numbers telling us. How can we redefine these sectors? What are the sectors that can actually get out of scope? What are the levels of taxpayers that can actually get out of scope? Who are those that are not yet in scope? And by us expanding the scope, we are not constraining the taxpayers. We are actually giving them more advantage. That one who was not giving you an EFRIS invoice can now give it to you. You no longer have excuse, you're asking me to give you an EFRIS invoice, but you have not asked the other person to be on EFRIS. But also we expect for us to be fair to everyone. Everyone should be able to do the same things. What the comfort I want to give you is that we are not looking at the smallest taxpayer. Even when you look at presumptive tax, it says when you don't make 10 million shillings, you're not supposed to pay tax. So we are again not focusing on the persons that are on the street. We are not focusing on persons who have kiosks. We are not focusing on persons who are giving us foodstuffs. We are not focusing on the border guy. We are saying we want to focus on that has an input in any other business. Because if you're going to affect someone's business, you should also be compliant. And by the time you actually supply another business, by the time you supply government, you should also be having the capacity to learn these things and be able to comply. Because once everyone complies, and actually we say, if everyone is able to pay a small portion of tax, no one is going to be required to pay so much. If you get down, you realize our population has not embraced that. If you go in our circles, you discover that most of our friends who have businesses don't pay tax. But if everyone can embrace compliance and what we call voluntary compliance, where URA is not going to chase you down, then everyone will pay a smaller share of the tax burden, and all of us are going to be happy as Ugandans. And that slogan of dropping Uganda together will be important. And we can also get on the street and say, now that we are all contributing, can we have better roads? Can we have better facilities as Ugandans? Until we all contribute, it is very hard for us to actually ask government to do what it is supposed to do with the little resources that it has.
Thank you very, very much, Julius, for that passionate elaboration on the importance of EFRIS and the rationale behind its expansion to the 12 new sectors as we saw last year. Now I'd like to cross over to Ankit. In your practice, you've dealt with a number of taxpayers. What challenges do they face in trying to ensure EFRIS compliance? We've heard from URA's perspective the reason why they do what they do, but then it is only fair that we hear from the taxpayer's perspective. Are there any challenges in trying to comply with what URA is setting forward?
So, Fatuma, perfectly a very good question. But before I come to answer that one, I would like to take some leaf from the conversations which I have been hearing from both of my friends. Yeah.
Yes.
And want to summarize and come in and give some take on it. For the traders, my brother Becker, yes, I do agree that when you look at the internet usage, the population which can use the internet in Uganda, it is between 26 to 40%. So when we are trying to enforce EFRIS or implement EFRIS, we have this biggest bottleneck in front of us. Second thing is that, yes, I also do hear that in a situation wherein somebody is doing a business with a very limited capital of 10 million Uganda shillings, how do we expect him to make a monthly discharge of VAT, which comes through the EFRIS? Obviously, Julius has explained very well that VAT is an equation of input minus output, or output minus input, and whatever is the balance is what you pay. But sometimes you may have a challenge of not being able to recover the money from your customers. And where do you get that working capital? Now, the unfortunate bit of this is that in our system, VAT liability for this kind of businesses is to be paid monthly. We may look at a policy amendment wherein the quarterly payments could be facilitated so that working capital bottleneck could be addressed. But on the income tax bit, to my friend in Casita, the law is very sensitive to small taxpayers whose turnover is below 150 million. And trust me, the tax expected to be discharged by them for a year, lump sum tax, is in a range of 600,000 to 800,000 or 900,000 shillings. So it's not a substantial burden. To the Uganda Revenue Authority, we have experienced, and this partly answers what Fatuma has raised. We have seen challenges with a very EFRIS compliant taxpayers. Forget the non-compliant, but EFRIS compliant taxpayers, there have been delays in processing their refunds. My brother comes from large taxpayer of payers office, which is very efficient and very sensitive to the taxpayers. But there are many other offices where the small taxpayers are. You go in circles and circles and circles. The refund does not fall in our station. It falls in refunds office. Refunds office will tell that we need to audit this. Then when refunds office complete their audit, station will come that now we need to audit again. So it's compliance, and circles, and there are delays. And that delays discourages the traders like the members of Casita, where they may have a genuine concern on that side. And also on the issues of usage of EFRIS, Julius, we can look for a tool or kind of, I know there are EFDs in place, yeah, but there are people who find difficulties even to use that EFDs. So we can look at some other simplified tools which could help in generating of EFRIS invoices or e-receipts to our people who are not that tech savvy, and we may not have that kind of we may not have a situation where 50% of our people are not tech savvy, because we have that situation and we may not be able to get over them very soon, because it's evolving education, and tech education is an evolving story. Some of the challenges which even the EFRIS compliant taxpayers are facing is credit note delays, their approvals. As much as Julius, my brother, who has mentioned that returns are automated, they are automized, we have seen that there are errors coming in. There are timing differences in terms of input tax credits for the importers, which gives them a significant burden. They face a challenge of fiscal invoices on input tax credit at the time of importation not being reflected into their portal or system. Then credit note approval delays. Obviously, large taxpayers have that provision wherein the taxpayers themselves can approve their own credit notes, but other stations don't have that luxuries. So that is something which needs to be worked upon. Then the timing differences which occur between when you account for particular invoice and when it is reflected in the EFRIS system, that brings lots of reconciliation headaches, and sometimes it leads to unnecessary tax exposures, hassles, and burdens. Then on the functionality of credits which is appearing in the ledgers, which is not related to EFRIS, but if we have a EFRIS FDN invoice which has input tax credit being generated and reflected in the ledger, we have wholesale supported by EFRIS invoices, and now because of this thing there is a credit sitting in a ledger, we can't freeze that credit. We must allow that credit to be used, and that those kind of things only help working capital easing, and that will help our economy to move and ultimately lead to bigger and better revenues. So then punishing people to because even in the EFRIS era we have seen input tax credit mismatches. Yeah. So say in my in an example, say Fatuma has raised EFRIS invoice. I have paid her for that EFRIS invoice, but the VAT on that one she has not paid to URA, and because of that, I as a purchaser is made to suffer and denied the input tax credit. So that is something which we need to iron it out and make a clear directives. That this kind of a small things will give confidence to traders and will also help revenue authority to boost their revenues, which is what end game and end objective is. So thank you, Fatuma. Over to you.
For that elaborate discussion. So I'd like to move on to you, Baker. We've heard from the taxman. He has told us the rationale of EFRIS and why they're expanding it and some of the benefits that could be gotten from the taxpayers and the traders. But we would like to hear from you, and by you I mean the traders. What has your experience with EFRIS been like? Now that after it, post its rolling out, what has your experience been like?
Thank you, Fatuma. And thanks, friends, once again. The experience is a mixed situation. For the better part, we've appreciated the good in it. We are progressively appreciating the good in it. Although, if we were to weigh, I think the weighing machine would bend more on what seems to be coming short. But on the positive, like my friend Julia said, we continue to notice some bit of support or simplicity of doing business, especially when it comes to issues of maybe if you want to talk about filing returns and all those other benefits that come with embracing EFRIS. We've seen that, and we continue to enjoy it. But of course, it's not to many of the traders. There is still some pockets of resistance or pockets of not so much aligning.
Yes.
For matters, most of which our friend, the consultant, has also talked about. Things that seem to be basic. For example, when it comes to sometimes taking the burden where you do not have the control as a trader. You don't have the control to the end tail of the value chain. So if the other people do not comply, then you're going to suffer. That continues to challenge. Then we also have an opinion that may look otherwise, but the opinion is that we feel the threshold is low. We feel the threshold is also low. But or when it comes to VAT, but I know why I'm saying this. Reason being that EFRIS is in significant ways looking at both income and I think VAT. So that's why I say so. And I know you may get the details or you truly understand the details. Probably I could also go into the appealing side where we get to appeal that maybe URA needs to rethink and reconsider the suspension that it had given to the tax credit transfer. I may not be up to date, but the last time I checked, it had suspended it, the tax creditor transfer. These are issues, basic as they look, which continue to challenge traders to fully embrace EFRIS. But also maybe just loud back again into what I said, the education and awareness. I think if there was one direction that URA needs to think through is that doing a lot of this tax education. And this time around, not only bringing the likes of Julius at the level of expertise and, but also engaging the leaders of traders, because we understand our people best. And many times we can easily speak in the language that they will understand. We have developed languages, by the way, that are unofficial. But when you join a community, there are things that you're going to learn or to embrace, including languages, including maybe phrases that you may not understand. But if I used it, the friends down there would easily understand. Yeah, so, and at times it's also an issue of the community not aligning very well or relating very well with the regulators and enforcers. Yeah, so I am of the view that these issues, including those that all my colleagues have highlighted, need to be thought through. Probably as Tax Hub, I would want to challenge that we need to come up with a I would want to use the word complete kind of documentation or something in this line. I know this podcast is one way into doing that, but I think if we put the brains together and they had a very solid maybe approach or write-up or something, but write-ups may not be well read, but maybe an approach to which we can have cascade this downwards, it would be very, very good. So maybe I can throw it back to you, Fatuma.
Thank you very much. We as the Tax Hub have taken note, and I'm very certain that the Taxman too has taken note of your concerns and experiences. Now, our time is fast spent, but still with you, Becca, you've briefly hinted on a few recommendations that you'd like your URA to take into consideration. Could you briefly take us through those recommendations that you feel, if implemented, would lead to better EFRIS management?
Yes, allow me reaffirm. I think I need to summarize this into 4. One is tax education and awareness. I've intimately talked about this, and I know for sure even at Casita, we are coming up with what we are branding as a tax training and transformation center. I mean a traders training and transformation center, where the element of tax is sharing the biggest portion of our planned activities, because this is one of the biggest animals in our room when it comes to trading. Then the other would be an appeal to URA, especially in revisiting and where need be, readdress the tax procedures, some of which seem to be constraining. Sometimes the procedures seem to be not well aligned to what the realities are. So probably they could do that by providing a lot of support, either from URA internally or other stakeholders like the consultants. We surely need this kind of support. The third would be for URA to really look at the issue of tax equity. We've talked about it severally, where everyone pays something, if I may understand it or share it that way. We need to see that we widen the tax base more than broadening. I think if I was to make another appeal, that would be very important. Then maybe also to adopt one of those that our consultant just mentioned. We need simpler tools. Yeah, we need simpler tools. I may not, for example, tear down the tool, the EFRIS tool, but I think they still need to continue simplifying some of these. The simpler they are, the better, and the more we shall have compliance. So in that line of appeal, I think those would be my submission. But when it comes to policy level, I would have a complete set.
Yes.
Back to you.
Thank you very much, Becca, for those insightful recommendations. I'd like to come to you now, Ankit, from a technical perspective and your interaction with URA on behalf of your various taxpayers. What are the consequences for non-compliance with EFRIS?
So, Fatuma, you have asked me a question, the response of which people will say that I am threatening them. But see, first fiscal penalty for non-compliance with EFRIS is that you may be made to pay a penalty double the tax applicable on the goods being sold. So let's say I go to a shop, buy a mobile phone, say 1 million shilling. VAT on it technically is 180,000. But due to some reason or other, shopkeeper chooses not to give EFRIS invoice, and URA is able to catch that one. Then the penalty in the question to shopkeeper would be 360,000 shillings. So it is double the tax in question. Second, the law has given lots and lots of powers to Commissioner General or Commissioner when it comes to non-compliance with EFRIS. As much as it can lead to imprisonment also in some cases, and it can also lead to closure of your business premises. So these are, in summary, consequences of non-compliance with EFRIS. So like Julius mentioned, I would like to compliment that cost of non-compliance is very high. It takes years and years to build a capital. But at the same time, when you are building your capital and business, please be mindful that you are also doing compliances right. Because a non-compliance, and moment it is detected and what you end up paying, it washes out the years of hard work done in the business. Then another leg of this penalties and interests and non-compliances is that, look, there is a voluntary disclosure window available. Go to URA, declare saying that ABCD taxes has not been paid, ABCD EFRIS invoices have not been raised. Please accept my default. Whatever is the principal tax in question, I pay it, and absolve me of all interest, penalties, prosecutions. That can be doable. URA has a mandate to approve such kind of a voluntary disclosure. It comes with some basic conditions, but Commissioner General has powers in the law. Commissioner General can approve those kind of a voluntary disclosure. So that window is available in case somebody has realized it hard way, that they have skipped something intentionally or unintentionally. Come forward, declare, call it an end, and do your business peacefully. Secondly, there is kind of an amnesty going on, wherein if you pay full principal tax by June 2026 and your liability pertains to a period up to June 2024, then you don't have interest and penalties to be paid. So these two are golden windows available. Come forward, declare, finish. Because the law of land till date is that EFRIS compliance is to be done. I am also quite mindful of the fact that after the interactions of Kasita deliberations between the biggest office of this country, URA was given directions to waive certain penalties which were charged, and those were waived. So post those things, if there is anything accumulated, the windows are available. Declare, come out clean, and begin the chapter on a clean slate.
Thank you very much, Ankit.
Thank you.
I'm sure our viewers have understood the implications of non-compliance and how they can remedy previous wrongs that they could have knowingly or unknowingly done. Now, I'd like to move on to you, Julius. This notice, the URA public notice that expanded the scope of EFRIS, lists certain sectors. For example, it lists mining, it lists entertainment, some of which are vague to our layperson. Could you please expound and further explain on this expansion of the scope of EFRIS? What amounts to entertainment, for example? What amounts to being in the mining sector? Does it apply to these people who quarry with the hammers? Should they also start filing EFRIS and then issuing out EFRIS invoices? Yes, please.
Okay, thank you so much, Fatuma. I thought I had answered that question, but I want to raise the fears of our very, very small taxpayers. Because, like you said, we have people who are just in the quarries and they are actually knocking stones every day to make a living. But they are not going to supply to local industry, to local construction or to Arab contractors. So they will still remain small and we will not require them to actually issue EFRIS invoices. Look at transport, for example. The questions that I've had on the street: are you also going to require the border guy to give me an EFRIS invoice? Are you going to require the taxi guy to give me an EFRIS invoice? And they're saying no. Because even when you're looking at these expenses, these are not the main expenses that form business. Remember, as we are looking at EFRIS, we are looking at enabling every business have the right input. We have had the concern from the tax-paying community. And as URA, we are not seated. We have actually engaged the different stakeholders to be able to define all these sectors to the list that we can find it. And that work is in progress. As I speak, we are already underway looking at the nitty-gritties to ensure that we do not catch the small fish with the big tilapias. So all we are doing is, can we be able to be fair? Just like we say, when you hit 150 million for your sales, you should be registered for VAT. Don't we have so many people who have hit it and have never registered for VAT? So when there is a system, we implement it piecemeal. And what I want to assure taxpayers out there, URA is not here to do the enforcement. It is here to support you to comply, because we call it voluntary compliance. So we are going to take it piecemeal. We are going to educate. We are going to sensitize. We are going to handhold people. We are even going, that's why we are even establishing so many branches everywhere to ensure that we can be able to get to the trade, and then the person we are targeting, we can reach them and tell them what they need to do. And even get to know what they are facing and support them. So in the first year, for example, we've rolled it out from 1st of July 2025. We are finishing the first year. I am very sure this first year is going to be education, sensitization, education, engagement. Until we are very sure that now everyone knows what they are doing. And I am happy that Casita is starting to do the same. If they can start these sensitizations and engagements at their level, we are very sure that after 1-2 years, everyone will be aligned. And as we start the enforcement, we are also going to start with the big players. For example, if we say we are going to enforce, we are going to start with the large taxpayers, because we know the large taxpayers have no excuse. They know what to do and they understand what they are doing. We'll go to the medium taxpayers, By the time we actually get to the lowest small taxpayer, they will have understood, because these small taxpayers at the same time engage the medium and big taxpayers. Now, if you're a big or medium taxpayer out there, then you must be an agent, because the fight has been that you must have everyone on board so that we also have input to be able to manage our businesses. So we want to work as a team. The consultant, you've heard the consultant say that they are also out there to support the taxpayers. So as URA is educating, if the taxpayers are also able to educate each other like Casita is going to do, like the consultants are also going to do it, like Tax Hub is also doing it, it means we'll be able to build a mass of sensitization. What I want to show you is that even when URA has done so much, tax education is an everyday game. And we are not tired as URA. We want to ensure that taxpayers know that when we bring these systems, they are not to break their businesses, they are not meant to close their businesses, they are not meant to punish them, but they are meant to ensure that they support the growth, but also remain compliant. Because we know that when someone is compliant voluntarily, they find it cheaper in their business than when, for example, we come to audit you and look at so many years where you have actually made mistakes. Mr. Ankit has actually said, we have a process called voluntary disclosures. Voluntary disclosure is that the taxpayer comes and says, I made mistakes. I have now discovered that I made mistakes. I have come by myself without any trigger from URA. Can I pay the tax that I ought to have paid that time and then forgive me the penalties and interest? The law allows that. We also have a situation now, he has talked about the waiver of penalties and interest that accumulated for tax liabilities that were there in 2024, June 2024. That is also there, but it is expiring on 30th of June 2026, and we have a few months to go. So if you're there and you have a liability, please come and pay it. We also, by the way, give installment payments. Most of the taxpayers don't know that you can actually come. Instead of paying at once, you can actually pay in installments and favorable installments. We also have, by the way, also have tax waivers that when someone comes and as long as they are able to show that they have hardship with their cash flows. For example, my business is failing. I have a bank loan and I can't operate. As long as you're able to show that you have hardship and convince the Commissioner General, and Commissioner General is also able to convince the Minister, and the Minister is also able to convince the Parliament, then such tax can actually be waived. So as URA, our door is open, and like we said, taxpayers must learn to trust URA. Where we find a problem is that some taxpayers even fear entering URA offices. When you come to URA offices, you're not taxed. You only come to learn so that you go and manage your affairs. If you have any issues out there, please come and we'll educate you, and we'll not even charge you for educating you, so that you do the right thing and then you minimize the costs of non-compliance.
Thank you very, very much, Julius, for that elaborate discussion. Mr. Baker?
Yeah, I know. This is casual. Please take it in good faith. Yeah, the reason why people, just adding to what you just concluded with, why the traders or the common people, common man seems to fear URA is that I think URA and other regulators have put themselves in the corner of bossing, not being peers. Yeah, so it would be preferred that we continue to develop peer relation between the regulators and the people who pay the taxes. That's why I kept smiling, because I know for most of our community members, they do not even want to come within your vicinity. Yeah, yeah. So it's almost as bad as that. But that is all that I wanted to say in supplement or in reference to what you said. Thank you.
Thank you very much to our dear panelists for making the time to come and have this very insightful discussion. I'm very certain that our viewers have benefited so much from your cups of wisdom that you've shared with us today. I'd like to thank our viewers for sticking with us till the tail end, and just to thank our panelists personally. Mr. Ankit, thank you very, very much for coming and making the time.
Thank you.
We are very appreciative of you and the entire Grant Thornton family. Please send our regards when you go back. Mr. Bahasha Baker, the Advocacy and Research Officer from Casita, thank you very much for making it on short notice. We are very, very grateful. The discussion wouldn't have been as enriching as it has been had you not been on board. And to the elephant in the room, Mr. Julius Mandeva, representing the taxman, the Uganda Revenue Authority. Thank you very much for making the time.
You're most welcome.
Thank you very much for breaking the barriers and the stereotypes that our viewers and the lay people have of URA. I believe that with such engagements and discussions, we shall reach the promised land. Yes. Then I'd like to thank Onomo Hotel for hosting us and providing this very comfortable and beautiful, cool venue where we have had this very interesting discussion. Onomo Hotel is located along Akibua Road in Nakasero. Please feel free to come and check it out, as we have. Yes. So we remain the Tax Hub podcast, and I am Navulia Fatuma Ramadan, a tax associate at H&G Advocates. Please subscribe to our YouTube channel, interact with us, watch our episodes. This episode is going to be uploaded just like all other previous and subsequent episodes. Interact with us across all social media platforms. We are on X, Instagram, TikTok, LinkedIn, you name it. We are looking forward to receiving your feedback regarding our topics of discussion, the panelists, as well as areas for improvement. Thank you very much.